From the pricing concepts, the first pricing concept, cost-based pricing. Out of that cost-based pricing, markup pricing is the first one that we are going to study. And what we do in the markup pricing, we add a fixed markup of our profit to the unit cost of buying a product. We add a fixed markup of profit to the unit cost of buying a product. When we specify the term buying, it means the retailers are mostly using it. Used by retailers mostly. If we have the total cost of buying something, for example, $10, okay, we want to add 50% markup. And now, what is markup? Markup is the percentage profit on the cost of production of the product or cost of buying of the product. Markup is the percentage profit on the cost of buying of a product. So we have purchased it for $10. So 50% markup means 10 multiplied by 50%, answer is 5. Now we can easily calculate the selling price. Selling price will be equal to unit cost at which we purchased plus markup profit. Means $15. 10 plus 5 is equal to $15 is our selling price. In this way, we calculate the first pricing technique, that is called markup pricing. Very similar to that, another technique we have is called cost plus pricing. Cost plus pricing. ओके इससे बहुत जो सिमिलर टेक्निक है वो कॉस्ट प्लस प्राइसिंग टेक्निक है, उसे हम यूज करते हैं. कॉस्ट प्लस प्राइसिंग टेक्निक इज यूज्ड बाय द मैन्युफैक्चरर्स बेसिकली. सो हम कहते हैं सेटिंग अप द प्राइस बाय कैलकुलेटिंग द टोटल यूनिट कॉस्ट ऑफ प्रोडक्ट एंड एडिंग अ फिक्स्ड प्रॉफिट मार्कअप टू दैट. सेटिंग अ प्राइस by calculating total unit cost of the product and then adding a fixed profit markup. Now, we have a few steps for that when we talk about the cost-based pricing. For example, what we do, we need to estimate the total number of products we are making. Total units we are making. That are 1,000 units, for example. We estimate the total cost of that. For example, $10,000, we have estimated that this cost will be incurred on that. Then we calculate the unit cost. Unit cost is average cost basically of one unit. 10,000 divided by 1,000. So we came to know that we have $10 per unit. $10 per unit is the average cost. Now we assess that what is the markup profit that we are going to add on this. For example, we want to charge 40% markup profit. %40 markup. So अब हम क्या करेंगे, हम $10 का 40% निकाल लेंगे, that is 4. The rest of the things are same. Selling price will be equal to unit cost plus markup profit. That is 10 plus 4 is equal to $14. In this way, we calculate the markup and cost plus pricing separately for manufacturing business, because we need to calculate the unit cost of manufacturing in the manufacturing business. And in case of retailer, we calculate the markup pricing. What are the advantages of this cost plus pricing? First of all, the price covers all the costs of production. The price covers all the cost of production. Second, this is the easy and simple way to calculate the selling price. Easy and simple way to calculate the selling price. I was saying that this is easy and simple way to calculate the selling price. And the third benefit is that it is very suitable to those businesses like monopolies who are price makers and who do not need to consider any competition, and they can make profit as much as they want. It is very suitable to the businesses that are price makers like monopoly, because they can charge the profit as much as they want to. Coming to the disadvantages of cost plus pricing, it is inaccurate for business with several products when there is a doubt over the allocation of the fixed cost. Inaccurate for businesses with several products who have doubts over the allocation of fixed cost, because they do not know that how much allocation of fixed cost should be done to one product or to the other. Over the allocation of fixed cost. Second, it does not take the competition into the consideration, and sometimes it can make the business uncompetitive. For example, if you're charging too much high price as compared to your competitors, your products won't be sold because you will become uncompetitive in the market. It does not take into account the conditions of competition. So it makes business uncompetitive if they are charging too much price. It's inflexible in nature. That again makes business uncompetitive in the market. If the sales fall, average cost may rise. As a result of that, business might have to increase the selling price too. And that is exactly against the decline life cycle of the product, because at the declining stage, you cannot charge high price. But business will not be able to charge higher price at declining stage. So these are the advantages and disadvantages in detail of cost plus pricing.